Welcome to today's webinar. My name's Jo Malvern. I'm the Editor-in-Chief of ACCA's Accounting and Business magazine. Today I'm going to share tips for selling into the US, focusing on sales tax and compliance. We need to have a couple of experts to share this with us today. So we've got Fubin Yuan, who's Tax Technology Manager, and Nicole Morton, who's Cross-Border Solutions Manager, both at Avalara. Before we get started, we're going to run through a few housekeeping issues. So the presentation will be accompanied by slides that automatically change as our speaker presents. If you find they're not progressing, you can refresh your browser. For PC users, you do F5, and Mac users, Command and R. You can access the slides from the resources area as well. You can also send us in some questions, and you can do that at any time using the chat area on your screens. We'll go through those in a Q&A at the end of the presentation. The whole webinar will last under an hour. You can enlarge the slide area of your screen by grabbing and dragging the bottom right-hand corner of the slide area window. And there's also a help button if you have problems with the technology. Finally, turning to CPD, if you're an ACCA member, you can count this webinar towards your CPD if it's relevant to your career. You can apply the learning in the workplace and can provide evidence that you've joined us today. For that evidence, we've provided a personalised CPD certificate, and you can access that via the certificate icon in the middle of the tray at the bottom of your screen. So that's it for the introduction. Now it's time to hear from our first speaker. Over to you, Fubin.
Hi, good morning, everyone. Good morning, the audience. My name is Fubin Yuan. I'm the Regional Sales Manager from Avalara. A little bit of background about myself. I joined Avalara a year and a half ago, and the region I'm covering right now is at the APAC region, DACH region, and Benelux region. And today I'm presenting with my coworker, Nicole. Nicole, do you want to give a short introduction about yourself, maybe?
Yes, perfect. Thanks, Fubin. Lovely. Thank you all for joining today. I have worked within the logistics space for the last 10 years, as well as in the tax technology space for 2.5 years. So yeah, hopefully today's webinar is helpful. Thanks, Fubin. I'll hand back to you.
Great. So we come to the next slide. So just some background about data point about Avalara. So we were founded in 2004, and we became public traded in June 2018. So we currently have over 30,000 active customers support globally and 2 million returns to process. So we have over 50 countries served through VAT reporting and 95 countries with the customers. So currently we have more than 205,000 employees across 24 offices in the US and also abroad. As you can see here, we have established over 1,000 pre-built connectors, which is also known as integration partner. And Avalara offers a fully cloud-based tax automation solutions, which has helped the business of all different sizes. The main benefits of using our solutions are to be 100% compliant and reduce your risk when doing the sales tax calculations and having a fully streamed process when it comes to the sales tax. So I'm coming to the next page. So here's the agenda for today. So me and my coworker will covering following points. So we will start with the sales tax, especially for the US sales tax, and we'll break down into different sections and explain all in details. The following topics is about shipping into the US, especially when you're setting cross-border, and what kind of the key challenges are there, and mainly for online sellers. So during the presentations, and we'll also explain the tax compliance rules, and which including the US states, registration, filings, and ECM solutions. So of course, we will present Avalara solution at the end and I'll give you a brief introduction about Avalara platforms and from sales tax calculation, data management, and remit process. At the end of the presentation, we also have a Q&A session, so you will have the opportunity to ask any questions in between. So we come to, right, so we have some open questions here. The first one, are you already doing business in the US? So we have 4 answers. So I assume the audience can see that and just write down your answer, and I will collect the answer at the end. Okay, should I move to the next page?
Yes, if you can move to the next slide.
Yeah, I hope this works. Oh, sorry. So the next one is, are you already doing business in the US? Just tell us a little bit about your business. When did you start it, and what kind of business you're doing, and if you know anything about doing business in the US, and you can collect the answer and write down here, and you can ask questions, or you can ask at the Q&A session at the end. I will give a couple of minutes for you guys to check the answer. Great, I'm coming to the, oops, why this one is not working. Sorry, a little bit technical issues here. Right, can anybody see the what's the sales tax page? Just want to make sure the audience can see that.
Now, thanks. That looks good.
Good, okay, so we start, good, okay, we start with sales tax here. So sales tax in the US is an indirect tax on the sales of goods and service to the end buyer. So it's also managed and governed by the state level. So what we understand is a different one compared to VAT, we understand in Europe, and GST in Canada. So it also appears on the final transaction with the customer. At the same time, it also appears to B2C, B2B, and B2G sales. Sometimes we also see some states might grant a local government the authority to impose additional general or selective sales tax. So we go details after that. As you can see here, so the sellers is actually responsible for the sales tax calculation, tax collection, and doing the remit process, also known as the filing process. When we're talking about the B2B business here, so when you have a seller, so sells, you sell your service or goods to any enterprise level customers, and which doesn't actually mean that this customer is automatically exempt from sales tax. So we are talking about more about someone who's your customer, but this customer is not your end customer. So they might just buy your products and remanufacture and create a proper brand new products, or resell your products, put some margin on top. So acting more like a reseller or a middleman. So for that case, and we will consider this as a B2B exemption case. For this kind of clients, and you will need to request them to provide a valid exemption certification, so which is one of our ECM solution, and I will explain at the end how this actually works. So we come to the next page. So we're coming to this colorful map here, and this is obviously a US map. So every color in this map actually represent a different tax rate. So we can see some states which have a similar color in that states, and they have got less tax rates to deal with, and make your work much easier. For example, if you're in one of these states, popular states, such as Texas, let's see down to the map here, Alabama, New York, and the more people you have in that states, generally speaking, more tax rate you have to deal with, because you have more people and you got higher tax rate base, and more tax means like more bureaucracy, and it means more complexity to deal with. It's really depending on the states where you are right now. So you might have an easier time to deal with the tax rate, or a difficult time to deal with the complexity, and which is also the sales tax compliance coming into place. So imagine, as a foreign business or enterprise company, and dealing with these states can be extremely challenging. So we come to a example here. So when we are talking about sales tax in other countries, for example, in Germany, and you would never see different tax rates within the same state, same city, or even in the same street. And this is an example to explain a little city in Denver as an example, what we can see here. So this is a city, has a few tax rates in it. And so just on this street here, and we have two next door neighbors, but they actually have two different tax rates. And the one is 7450, and you got 9.25% rate. And the other one's a 7452, and it got 4.75% rate. When you look at the difference between the main tax rates here, and you got the states, country, city, couple of special jurisdictions, the 9.25% does fall into the city limit. The other one on right, so 4.75%, you see the cities is not in the city limit, which we call also is missing from the jurisdiction breakout. So they're just out of the city limit, but that means almost 4.5% rate between these two households. So if you are someone actually in the US or doing business in the US and who's using zip code rates and to file today and look up the rate in the US of your customer, you probably won't get it right because it's so complicated, and which means you will be charging the wrong sales tax and doing the wrong remit at the end. There's a very common misconception in the US. All you have to do is, look at the right zip code and get the right tax rate done and attach that in your system when doing the filings and doing the registrations. So you might have a state like Colorado, California, Texas, Florida, and where you have like 2, 3, and 4 different tax rates with some simple, one zip code, and which is extremely challenging in these states to do businesses. But in other words, in some states, you might be fine because they offer a flat rate state. So then you don't have to worry about it because every zip code, give you the same rate. But in some other states, where we have more complicated zip code rate and different sales tax rate, different rules, it won't be accurate at the end. Let's see if there are any questions from the audience. Good, I'm moving to the next page. So coming back to Nexus, to the audience, you might not heard these words, but when you're doing business in the US, and you need to understand what Nexus means and to you and to your business. So sales tax Nexus refer to a connection to including a business or a seller has with the state. So that created obligations and which required the seller to register and then collect and remit the sales tax in that state. So certain states' activities and certain business activities, including having a physical presence or reaching a certain sales thresholds, may also establish the nexus with that state as well. So we have 2 different types of nexus. The first one is the economic nexus, and the second one's, the first one is physical nexus, and the second one is economic nexus. So let's talk about the physical one first. So physical nexus first. Here are some examples to demonstrate when a seller has triggered the physical nexus. When you have an office, a warehouse, for example, someone uses Amazon warehouse or other warehouses in these states, and you have employees and you are serving business in that space, and you have inventory, a third-party warehouse, for example, which I just mentioned, like Amazon warehouse, and you triggered physical nexus already. And also one common thing people forgot is like if you have an employee and travel to any trade shows or any events in that certain states, and you also trigger the physical nexus. Any questions for physical nexus from the audience maybe today?
I think if we carry on, we can take the questions at the end. I think they're coming in, but they're on different topics, so do go ahead.
Okay. Yes, I'll just move to the next one, economic one. So we're coming to economic nexus. So what is economic nexus? So economic nexus is a term and which describes when you are doing too much business in a particular state. So where you have earned sales tax obligations. So it's designed to capture more tax revenue from remote sellers who are selling online. So how the economic nexus has been measured. So each economic nexus is defined by 1 or 2 thresholds. As we see here, the first one is the amount of sales in dollars. And the second one is the number of transactions you have made to the customer in that particular state. So each state can define this threshold differently. The most common thresholds are $100,000 in US and in sales, specifically your made, or 200 separate sales transactions. So which means the 200 separate invoice you have generated. So for example, New York and it uses different thresholds of $500,000 in sales and hundreds separate sales transactions. So each different state has different rules. So it's best to check the economic nexus rules in each state and when you have a customer in that state. So you can also use a tax compliance tool like Avalara, and which will be monitored everything automatically for you. Because every threshold takes into account your annual sales revenue, right? So for most of the states, this means, current and previous calendar years and all the sales figures will be taken consideration, will be added on. In other states, this means also the previous 12 months and when your annual sales pass one of these thresholds. So you now have the economic nexus there, and which means you must register for sales tax, and then you start charging and collecting sales tax and do the filings, which is all the returns process. So this is extremely important to our customer. We keep telling them, because failure to register for sales tax on time, can result in penalties and fees. And plus, if you are not charging and collecting the tax from your customer when you should be, and then the money will eventually actually coming out from your own pocket. So this is my last page for today, and give you a very quick example. So as you see here, example for tax in New York. So how New York closing state tax exemption works. So items of clothing in New York under $110 in purchase price are exempted from New York 4% state tax, right? So this exemption applies only to clothing and footwear by human, actually, and as well as fabric, zippers, and buttons. Similar items that are used to make repair exempt clothing and become a part of the exemption clothing. However, here's the rules, right? So such an item are not exempt if you are made from precious or semi-precious stones, jewelries, or metals. So even these items sell less than $110. So I am handing over to my coworker Nicole to present the next stage. Nicole.
Perfect. Thanks, Fubin. I think there was an additional. Just move over. Amazing. So hopefully, I think it's very clear from Fubin's slides that selling into the US is complex. It's not something that you can, each state has different rules. As he mentioned, physical, economic nexus. There's quite a lot to consider. So it's very important, to be aware of that so that you don't get caught down the line. With tax, it's all about being compliant, and being non-compliant, has consequences in the forms of penalties and interests and all sorts of other things. Another thing I'm going to talk around is just shipping into the US. So we obviously spoke and looked a lot around, the different state regulations, but what about getting into the US, in the first place? Now, we went out and asked, what are customer pain points? And as you can see from this, the largest is really shipments delayed in customs. And this isn't going to only be something, relevant just to the US. I'm sure, many, feel those frustrations shipping worldwide. But just something obviously to bear in mind when looking at the US. We have shipments delayed in customs, added supply chain costs. Obviously, you have to get the shipment there, and, that comes with additional costs. A big one, 46%, said accurately calculating international duties and taxes, was one of the biggest pain points, and really knowing where to start. There's some others here, but another one to highlight, poor user experience for cross-border shoppers, customers rejecting shipments. Those are all going to have an impact on your business's bottom line. If they are rejecting shipments, it's your responsibility, and you will pay the courier fees to get that shipment back to you. Alternatively, you might decide, oh, it's not even worth it, destroy it. But still, there's costs obviously involved in that. The good news is, I don't want to just be all doom and gloom. The good news is these are all solvable problems, and it's really about looking at your business and putting in the right solution to obviously support you. We have a poll question here, which will be popping up on your screen. So the question is, which is your biggest challenge doing business in the US? Is it shipments delayed in customs, added supply chain costs, accurately calculating tax and customs duties, poor user experience for US customers, customers rejecting shipments, or potentially none of the above? So let's see really in the audience that we've got today, if that might be similar to the slide that I showed previously in terms of, the biggest challenges. So I'll give you guys a couple of minutes to answer. Let's see if it does match my slide. Otherwise, it might be a whole different way of problems.
What are you expecting to see there, Nicole? Or do I not want to preempt the answer?
No, I would expect to sort of see similar to the slide, previously, really. The calculating taxes and customs duties always is a big one. And shipments being delayed in customs, and maybe it's not specific to the US because the duty threshold is higher, but I'm sure that is, when I speak to customers on a day-to-day basis, it generally is what comes up. But let's see Let's see what we've got.
Okay.
Perfect. So these are some of the answers coming in. So there we go, Joe. The accurately calculating tax and customs duties seems to be, for this audience so far, by far the highest. None of the above. Okay, so some of you obviously aren't, sending in, or that's great if you have, figured out solutions that isn't a problem. But as we saw, quite similar to, the slide that I showed in terms of some of those customer pain points. And definitely calculating duties and taxes is something we can talk more about and how we can support. Okay, so I'll move on from that. Thank you for answering that. So we obviously spoke through and Fuben went through the different tax requirements in the US, and as I'm sure it blew many of your minds in terms of the nexus and when you need to register and thresholds. But what confuses many people is there's actually two different types of thresholds that come into play when shipping, worldwide. The first is the duty threshold, and then there's the import tax threshold. And more often than not, people bundle them in and think they're one of the same thing, but they're not, okay? So as you can see from this table here, the duty threshold, if we look at some big destinations, obviously we're talking about US today. So that threshold is $800 US. So that's why often it doesn't come up for people. However, there is talks that the US are going to reduce this or do away with that threshold entirely, which would have a whole different impact and ball game on doing business in the US. What this threshold means is you can send goods up to this value and not have to pay duty on that particular product or items, okay? So that obviously would have an impact on your sales to that particular country, because if there is duty added on, it's just ultimately making that, more expensive for your customers to do business with you. The next threshold is that import tax threshold. So we would all know recently, it was in 2021, they did away with past thresholds within Europe, and they came up with a new sort of e-commerce regime, which brought that threshold to zero. So you might have heard of IOS. That's a different webinar, so I'm not going to go on with that, which you might be glad to know. But what that means is if you are a UK business now and you're selling into Europe, if your products are below the value of €150, you will just have the VAT that you will be responsible for charging, okay? If they go over the €150, you will have both. And as I'm sure you're aware, there are different values across. So, Germany's 19%, the UK is 20%, as you know. Europe spans from 17% to 27% VAT. And as you know, with the US, it's very dependent on exactly where that customer is, because it's all done through geocode mapping. So again, your US sales tax rates could really venture from 4% all the way to sort of 12%. So it's very important to understand this, when doing any kind of cross-border business, and ensure that you have something in place to help automate this so that you at least aren't falling short. Because what happens, duties will be something that your carrier, you can send DDP and your carrier can absorb that, and we'll touch on that in a few slides time. But the tax really does fall on your response, you as the seller's responsibility. For some countries, it might be that your carrier ends up having to collect that, from the end customer. But in the US, that's not how it works. If you've hit thresholds and you're not currently charging it, those liabilities will be incurred for your business. Okay. Let's move on a bit I'm going to touch on HS codes here, because what some of you might be wondering is, how does a country determine the duty rate that's going to be charged on products? Okay. And that is all through what we call a harmonized system code. You might have heard of this before. If you're doing any kind of business with products, you would have either importing or exporting. But every product in the world, the first 6 digits is universal to that product. Okay. But what many people don't know is the next digits, which can be sort of 3 to 6 digits, are specific to that country. So you can see here, Australia, US, and Japan, the whole code is all different, but yet the first 6 digits are the same. And so is the duty tariff. Now, each country will determine a duty tariff depending on what they're trying to protect within their country. So if a country, they have a big manufacturing, process for shoes, for leather shoes, maybe that's what they're known for. They produce them. They are going to have high duty rates for leather shoes coming into their country because they're trying to protect their own market. So that's really how it all works. It's what a country is trying to protect in terms of their own market. So HS codes are how you determine that duty percentage. If we move on to the next one, I mentioned DDP. Now, DDP stands for Delivered Duties Paid. And that's really how customers expect to buy online. What that means is whatever costs you show at the point of checkout when you go to purchase an item, it is the total cost that you're going to pay. If you do not send DDP, what it means is you might just show on your website or your checkout or your invoice, however you might bill or sell into that market, the items of which they're purchasing and the total price. That might exclude customs duty and tax. What happens is it gets sent with a carrier, it gets sent on a sort of DDU basis, so delivered duties paid unpaid, and your carrier will go to the end customer with a bill. Sorry, you owe X amount. Now, if any of you have been shopping online, there is nothing worse in that experience, getting the little red ticket through your door from the Royal Mail to say, we've got a shipment for you, but you owe X amount before we'll give it to you. It's a horrible experience. Customers are unlikely to come back to you because of it. They might reject the shipment, which will end up costing you even more. So and I'm sure I'm not, saying anything new because I'm sure most of you have bought online at some stage in your life. You expect to see, whatever you're purchasing, not have any hidden surprises. That is what makes a great buying experience. That is what you're going to talk to people about, promote businesses on, is that sort of great experience. Okay, so that's a little bit about, customs and duties and the two sort of different types of taxes really to be mindful of when selling cross-border. Now, as this is a US webinar, we'll talk a bit more about, summarizing that. What are the 5 steps to selling into the US? Okay. Step 1 is really researching your tax and duty requirements. I've obviously just touched the surface on this today in this webinar, but each of you are going to have different business requirements. If you're selling digital services, for example, it's a whole different, kettle of fish. If you are reselling products on and you're doing a reseller model, again, it's a different kettle of fish. So really researching and understanding that is an important thing. You don't want to be caught out down the line. I deal with lots of businesses that come to me where they're now, looking for funding. They have a buyer for their business, for example. They've grown and they're at that stage. And as part of that audit process, it's realized that actually they have a lot of, tax and duty liabilities that are, outstanding. It's a horrible place to be in when you're trying to, sort it out after the fact. The second step is register with the authorities. Based on the research you'll find is you won't have to register everywhere. You might have to register in more places than, another business that you are aware of. But once you understand where those liabilities are or where you have a liability to register, it's then registering. The next step is the ability and having something in place to actually be able to calculate the correct tax and duty amounts. For the US in particular, there's over 14,000 different sales tax rates. So it's not a table that you can just build in and work with. And if you do, the very likelihood is that you're not collecting the right amounts. And again, you'd be liable for those differentials down the line. Step 4, track and manage exempt sales. There are a number of products and services that are actually exempt. So if we're looking in the digital services space, SaaS, etc., there's only about 28 states at the moment that actually tax those services. So again, understanding, where your products or services might be exempt is another important part of it. And the last step is you then need to file and remit. It is illegal to calculate sales tax and collect sales tax from your customers and not obviously remit them to the authorities. So that's an important step to cover off here. I'm going to deep dive into these steps in a bit more detail. As I mentioned about the research and register, I've obviously touched on quite a bit of this, but there are things out there that can help you. At Avalara, we have a variety of sales tax risk assessments. We have a variety of them that are free, as well as some paid for ones, depending on how complex your business activity is. So that's one way of actually doing that analysis and determining. As part of that, it'll tell you, is there historical tax exposure and what that might look like. We can also support with HS code checks. We work with a number of businesses, and especially nowadays with more and more businesses going down that sustainability route, there've been a few customers where actually I've been able to identify that they are paying 7% more tax because they don't, or duty, sorry, because they don't have that right HS code assigned to their product because of what their product is made up. So again, checking, is there other ways in which you can save money? And here's a few other different things, compliance services. If you have determined that you've got liabilities in certain states, it's then looking back at, okay, how do we approach this? Is there a way we can go anonymously to the state on your behalf? So won't go into it in a whole lot of detail because it is really so customer specific, but there are ways in which we can look at it before anyone panics and really determine what the best approach forward is. The next bit, and this is a bit of a complicated table, but it's really looking at ourselves at Avalara. So we are a SaaS business, and we can automate that entire process for you. Our core software is called AvaTax. So not only can it calculate sales tax and do your remittance for sales tax in the US and Canada, but we can also calculate duties, VAT, GST in over 190 countries worldwide. So one integration either to your e-commerce platform, your ERP, your billing system. We have over 1,200 pre-built connectors. Once you have that connection and you've linked with our system, we can automate that entire process. So from calculating duties and taxes on your website, all of those complex thresholds that we discussed are pre-built into our system so that you don't have to worry about it. And then all the way to actually filing and remitting the tax to all the local authorities around the world. And another element is, this is very specific to the US only, is exemption certificate management. If you are selling to, you might be selling to governments, universities, schools, hospitals within the US, it's very likely that many of them will have what they call exemption certificates on file. And that means that you don't need to charge them sales tax. However, you need that certificate and need to be able to hold that certificate and manage that certificate if you were ever audited down the line. So quite a complex system, as you can see, but I think the ultimate message is that all of those complexities can be entirely automated so that you don't have to worry about it as a business. And that was it. So thank you very much. Hopefully you did find it useful. If not, you can log off now. But we will still be taking questions. So if you did find it useful and you have questions of your own, or you would like to hear other people's questions, please do stay on, and I will hand over to Jo to go through the questions.
Thank you.
Thank you.
Great. Thanks very much, Nicole. Great. Thanks you and Ruben for that presentation. We've got lots of questions that have been flooding in as you've been speaking. So in the time remaining, let's turn to a few of those. So you can fight between yourselves as to who's going to answer which one. So first one is, will I create Nexus if I sell on a marketplace?
Yeah, I'm happy to take that. So the question is, the answer is it depends. It depends on each state. So as part of the Nexus thresholds, some of the states will count your marketplace sales towards that threshold. Others will not. Ultimately, there is what they call marketplace facilitator rules within the US. So it is the marketplace's responsibility to collect the sales tax and remit it. So if you are selling on Amazon, for example, and maybe Amazon FBA, Amazon is going to calculate it at the checkout for the customer, and they are going to remit it. So you don't have to worry about that. However, having stock within the US breaches physical nexus. So if you do have other channels in which you sell, those marketplace sales might count towards the threshold. So what might happen is, let's say you sell into a state that does count marketplace sales. You sell both in your own means as well as on Amazon, but you didn't realize that the sales on Amazon count towards it. So you only think it's that business. What ends up happening is actually you hit that Nexus threshold months prior, because it's looking at everything as a whole rather than just one line of your business. And what that will mean is that you owe sales tax on everything that's not going through a marketplace from the date that you breach threshold. So sorry, Joe, I mean, I don't know how to make that more simple a way of answering it, but as I think the summary is, it really does depend, and being aware of which states count marketplace sales is an important thing to look at.
Okay, great, thank you. Next question, how often do I need to file sales tax returns?
Do you want me to cover that? So yeah, it actually depends on your sales revenue, and for some states, it's monthly, some states is quarterly, but it really depends on how much you sell and how many transactions you have. For some states, we use Avalara account, we'll be able to help you to track all the rules and where you need to file and how often do you need to file. But again, certain states, they put the rules like, okay, you do quarterly, but if you over the number of you doing sales business revenues, for example, that sense, you're actually making more sales, and then you have to file monthly instead. So I hope that answered the question.
Thank you. Great. Next question. If we're exporting goods from a UK company into the US, do we need to register for sales tax if we exceed a threshold in certain states?
Yes, is the answer. So these thresholds are not specific to only businesses in the US. They are specific to businesses worldwide selling into the US. So yes, you would need to, if you've reached that threshold, you would, from the minute that threshold is reached. So if the threshold is $100,000 US and you get to 101,000, you are liable from that 1,000 onwards.
Thank you. Okay, next question. We are a SaaS business, software as service, trading in the US. Is there a single source of information that we could use to check the sales tax rates for SaaS for various states?
Yeah, so we do have that information on our website, so we can happily share. I'm not sure who answered that question, but we can happily share with you a link afterwards. However, it's going to give you an average. So it'll tell you for SaaS in particular, as I mentioned in my sort of slides, SaaS is not taxable in all the states. So it's about 28 states that currently tax SaaS services. There are a variety of other states that don't tax it, but they still count towards the threshold. So we have information on that we can share with you. We can give you an idea of what the average sales tax rates would look like for each of the states. But as you would have seen in Fubin's slides, there's over 15,000 sales tax rates across the US. So we don't have a list of 14,000. Those are built into our software. So if you want it to be done accurately, you can use our software. But you can have a look at what the average sales tax rate is across the US.
Okay, thank you. That kind of answers the next question in part, that was how do you keep up to date with or on top of the different rates and the changes in tax? But I guess the same answer applies, that you have to be able to.
Well, just to give you an idea, Joe, last year alone, we made over 200,000 tax content changes in the engine, and most of them were to the US. The US, they'll often have tax holidays. And as you saw on one of the slides with Colorado, and California is another one, there can be a local tax, a district tax, a county tax, a city tax. So there can be 5 different taxes that actually make up that tax rate. And what might happen is there might be a slight change to the local rate, which might be minuscule. You might hardly even notice it. But at the end of the day, to be compliant, that needs to be updated. So we have a team of content specialists that is their sole job, just to update tax content. So if you are trying to do it yourself, it will be a full-time job, and even then it might be a struggle, but it's a lot of work.
Sure, it's keeping a lot of people in business. Okay. An organisation that is based in the UK, some of our scientists visit US scientist exhibitions to present our organisation. The expenses are being repaid for this visit, and we usually we're asked to populate W8 or W9 certificate. Is that right? Sorry, very specific question for you there.
That, to be honest, I don't think Fubin and I can answer the real detail on that. We'd need a tax advisor to really look at that. But I know that would fall into one of the types of nexus that we didn't cover in great detail today, but there's such a thing as affiliate nexus, and road shows and activities like that in that question can in certain states trigger nexus, and that might be why they have to require, fill in that certificate, but that's not something that we can answer. It would be for a tax advisor.
Sure, too much into the details, sorry about that.
Yeah.
Okay. Next question, could you develop a little bit more, expand a bit more about the voluntary disclosure agreement, the advantages and disadvantages on both sides?
Sure.
Yeah.
Yeah,
so
we can
Ruben,
definitely do that. So if someone, a good sorry, you go. Oh,
sorry,
okay,
there was a delay.
Good example for most of my. Oh, so can you hear me properly?
Yeah, do go ahead.
Can you hear me now? Okay. Okay, cool. A good example for most of my APAC customers, and they're doing business since 2010 and never registered and never paid the tax. Or some of them, even collecting sales tax is actually not okay. It's not illegal, actually. So you only collect sales tax after you register in that state. And in order to register, you meet the thresholds and then you start to register. That's the first step. But most of the clients doesn't actually know about the thresholds, and they didn't register. They're just starting to collect sales tax and didn't pay the tax back, which is remit process, which will create some penalties. So when the state level come to you and say, okay, actually you've done something wrong, and if they caught you, unfortunately, we can't help. And before that, if you think, right, I might done business in the past in the US, but I haven't registered or already registered, I haven't paid the tax back. So there's a VDA process, voluntary disclosure agreement. So the benefit for that is when you receive a bill and you receive a tax liability, you have to pay back, plus a penalty, plus the interest. So when you go through the volunteer VDA process, what we do is that we have a team here and to calculate all the data for you back to 5 years, right? Some states even asking for 8 years. So we'll collect data and put it all in one Excel sheet and telling you, this is the penalty you have to pay, this is the tax you have to pay, and this is interest. So what we do is that when you go through VDA, you will only need to pay the tax liability plus the interest. So the penalty in between, that's a big part. And every state is different between 12%, even to 70% or 80%. So that part will be removed. So that's the benefits. And also at the same time, once we do the VDA, and you will be automatically registered in that state. One more extra tip points, because I have clients and they say, okay, do you know what? I don't want to do the VDA and I don't really care about the liability. I just get registered, normal registration. You can do, but the question you will receive is, when did you start to do business? If you do business within 90 days, you will have a window period to pay the tax back. But if your business is more than 90 days, you might not be able to. And some clients think, I just give a fake documents and a fake data, but it's actually not right, because once you get registered and they find out you have tax liabilities, they won't accept your registration request. So yeah, I hope I answered the question.
Okay. Thank you very much, Ruben. Okay, next question, quite specific, but I think others will be able to extrapolate from it. If a customer from Texas collects an order from our warehouse in Maryland, where does the sale take place for sales tax purposes?
It would depend on what was on the order. So if their address and their billing address is in Maryland, even though I know that they're collecting it in Maryland, but if that is where their physical, their billing address is, then it would happen in Maryland. If it's in another state, but they happen to be sort of driving through and traveling, then it would usually always be defaulted to the billing address, because if you ever audited, it'll be that data that will be looked at as part of an audit. And generally speaking, unless you actually defaulted the address to Maryland, then that would be within what they can see from an audit perspective. So you always have to think about, like, I might have my billing address, which is in another state, Texas. However, I, phoned into customer services and made an arrangement, or actually before you send it, I'm going to drive through and pick it up. There's no way for the state to know that. So it would always default to the fact that my address had been in Texas, in the data. Hopefully that answers it.
Thank you. Great. So somebody's got a general query here. They say they're interested in learning more about providing services to the US. So can you recommend or suggest one-to-one online financial coaching or financial education?
Specifically on sales tax or just in general, in all sort of aspects on
It
selling
says
into the US?
providing services to the US, but I guess we're talking about tax here today, so I guess in that context.
Yeah. So if it's specifically on trying to understand the tax, they're welcome to come through to either myself or Fubin, or we do have some information on our website and they can submit a query that way. We do work with a lot of partners. So if it is specific to how I can start a business, how I can register an entity, it wouldn't be ourselves at Avalara that can answer that, but we can point them in the direction of a partner who can.
Okay, great, thank you. Right, we're beginning to run out of questions, so a quick reminder, there's still time if you'd like to send in more, but let's turn to the next one. How can one get exemptions from sales tax, such as resale or local government authority?
So if that's in terms of you selling to them and wanting an exemption certificate, the best point of view is to ask. So if you are selling to, local governments, local authorities, it would be, to ask ask whoever you're selling into, for their exemption certificate. If you want it yourself, there is a process applying through the state. Again, we can't support in supplying those exemption certificates as a business, but it would need to come from the state directly. You would contact the state that you are wanting an exemption certificate from, and they would ask you sort of a range of questions to do with your business model, why it is that you obviously require the exemption certificate, and then depending on whether you get approved, you'd be issued one.
Great, thank you. Yes, a few questions about exemptions, so that's really helpful. Here's another rather specific one, but looks interesting. If a UK-based art gallery occasionally sells to clients in various states in the US, should they always register for sales tax in the state that the buyer is based, even if they do not know when and if they will sell into that state again?
So if you hit the threshold, you would need to, yes. So if you are still below the threshold, that's why the US and most states give you that sort of allowance. So in your big states, California, Texas, New York, the threshold is $500,000. So you have up until that. If you sold, let's say, a very expensive piece of artwork and actually it was valued at, I don't know, $1 million, you would be liable for sales tax on the 500,000 of that, if that makes sense. So if you are below the threshold, but you're getting very close, you don't obviously need to register. But if your orders have gone over that, the minute you go over, you need to register, even if you are unsure of, again, it comes down to how risk averse the business is wanting to be. But if we're talking about being fully compliant, then the minute you go over that, unless you felt that there was never going to be business again, but let's say if in 3 months' time you had business, you would still be liable for the sales tax that you owed from when you went over. And a registration on average takes about 4 weeks. So in that scenario, if you did, let's say, decide, okay, well, I've just hit the threshold, I don't think I'm going to do business here for a while, so I'm not going to register. If then you had an order in 3 months' time, you would be liable for sales tax on that. So it's just how you've got that relationship with the client to whether they're happy to wait or you're happy to wait 4 weeks until you get your sales tax registration back, and then you add on the sales tax. But legally you can't add on sales tax until you've got your unique registration ID back from the state. Hopefully that answers it. I know it's quite a bit of detail, but happy to take any other questions offline if that didn't answer the question.
Thank you very much. Okay. Would sales tax be exempt or mitigated by import tax paid from sales made into the US from a non-US incorporated company?
I'm not sure I understand the question. Sorry.
So would sales tax be exempt or mitigated by import tax paid?
So it would still, your sales would still always count to that threshold. So if the import tax is still referring to sales tax. So there's the duty. So if you pay duty as coming in, that's got nothing to do with sales tax. you would still owe sales tax to that particular state. So regardless of what you might have paid on your invoice that you received, when it cleared customs, if you are over a threshold within a state, you would owe sales tax to that authority. So unless, again, there might be a tax advisor, depending on the unique situation, that can say otherwise, but it wouldn't change the nexus thresholds and you having to do a remittance to a particular state for business if you've imported items in.
Okay, thank you for that. Moving around the sectors today, as a wholesaler of toys and games, who would be considered the final customer for sales tax? The business we're providing the goods to, or the customers of that business?
So in that scenario, that would be what they call a reseller type scenario. So you are sending all your products into, assumably, a wholesaler or maybe even a shop, and they selling on to the customers. You then just need to get an exemption certificate from your customer, because what will end up happening is they would be able to provide you an exemption certificate, which covers you to say, well, I didn't charge sales tax to this business, because ultimately they're the ones that are going to sell it on and collect sales tax from their end customer. So, however, if for whatever reason down the line, your customer did not collect sales tax from the end customer, it would come back down to you and you would be liable. So hence why having and managing exemption certificates is so important, because you don't need, as long as your customer can provide you an exemption certificate, you don't have to charge them sales tax, but then it's them that'll be responsible for selling the end customer, and that usually falls under the resale or reseller agreement that happens in the US.
Okay. Thank you very much, guys. I would think we've probably worn you out. I think we've certainly exhausted the questions. Thank you very much for everyone who's sent in questions today. It's provided a really interesting session at the end here. And thank you also to Nicole and Fubin for your time in sharing that knowledge and guidance. So thank you to everyone who's joined us today. I hope to see you again soon.
Thank you. Thanks, everyone. Have a good rest of your day.
Thank you. Bye.
Bye.